Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Good evening to all our viewers at Capital. Today is Wednesday, March 11th, and I'm analyst Gene Gita. Before we start, please remember to like, subscribe, and share. If you have any investment questions, feel free to leave a comment. If I can't get to them during the show, I'll follow up with everyone in tomorrow's class. Of course, as usual, I'll also answer questions from yesterday's chat room. All right, good evening, everyone. I see everyone is very active online. It's already Wednesday, and 2 days the week will be over. March and the first quarter will be gone soon. I hope your trading's going smoothly. Good evening, Hui Quan Juan, Yulun, and Sparkling Water. Hello to Flying Fish and 6P. Good evening to Alvin Chen, Alice Fu, Little Donkey, Caesar, and Chwet to you. Hello to all of you. Yes, politics, economy, culture, and lifestyle. I like to talk about it all. I hope I can cover everything. All right, good evening. Today, as usual, our investment focus will be wide-ranging. We'll cover everything from politics and the economy to international tech and industry. Today, I want to talk about some animal-related things. What kind of animal things? Let's take a look. First, our first investment focus. Are they still angry? What does that mean? It refers to the ongoing tensions between the US and Iran. And who's the angry one? It's not Trump, it's actually Iran. Trump is looking for a way out, and Israel doesn't want a messy, prolonged conflict either. But it seems Iran is still fuming and isn't ready for peace talks just yet. I'll update you on how tangled the US-Iran geopolitical risk has become. Also, another cockroach has emerged. By cockroach, I mean the credit cockroaches of the credit crisis. Is it just one or a whole swarm of financial cockroaches? They're slowly surfacing. Although the total impact isn't huge, some credit firms are seeing continuous redemptions. Starting from the last couple of weeks, we saw the UK's NFS go bankrupt. Then, firms like BlackRock and Blackstone also saw a massive wave of redemptions in their credit funds. And today, another company is facing the same thing. What should we watch out for? Besides geopolitical risks, keep an eye on those financial cockroaches. In the industry sector, Oracle, one of the companies the market watches as an AI perpetual motion machine, finally released its earnings. The report was quite impressive. Both the fourth quarter of last year and the outlook for the first quarter exceeded revenue expectations. But what about the concerns over free cash flow? We need to look closely at that today. Also, are you raising lobsters? After cockroaches, let's talk lobsters. I'm not taking you to the zoo, of course. In this context, what does lobster refer to? It's an open source AI tool called OpenClaude. Why is OpenClaude called a lobster? And why have so many people been using OpenClaude lately? Why do some people love this software so much, while many countries are issuing warnings about it? Interestingly, the founder of this company also joined OpenAI in mid-February of this year. So you really need to understand what this tool is. All right, those are the key points I'll be addressing today. Good evening, Singh, and hello to I Love Jolin. How do we stay profitable in a volatile market? Alvin Chen, 888. How to stay profitable? Manage your positions well. Before you buy or sell, have a plan in place. I think that's basically it. Whether you're buying stocks, indices, futures, or options in Taiwan or the US, it's the same. Before you act, you must know why you're buying that stock and set your take profit and stop loss points. Or rather, when a buy signal disappears and turns into a sell signal, we must decide on an execution point. So before every entry, you should anticipate potential scenarios. Only then can you stay in this investment game for the long haul and preserve your gains. All right, good evening, everyone. And also, who's this? Grace Liao. Good evening, Grace. Good evening. Okay, let's take a look. There are actually some important economic data points coming out tonight, in addition to the investment highlights I just mentioned. Tonight at 8:30, we have inflation data, the US February CPI monthly and annual rates. The core values will also be released at the same time. I'll give you a heads up. Today's February data shouldn't show much volatility. The February CPI should be stable, maybe near the expected or previous values. However, everyone needs to watch the March CPI data very, very closely. Why? Because starting in March, from February 28th, the US-Iran conflict began. Since then, whether it's Brent or WTI, international crude oil prices have kept surging, and rising oil prices will push inflation figures higher. This spike in inflation will likely be reflected in the March CPI. So while February might not see huge swings, you must pay close attention to the March data. Generally, March data isn't released until mid-April, and I'll track it with you then. I'm just giving you a heads up that the March CPI might tick upward. But for now, tonight's 8:30 release for February shouldn't have a massive impact. For the monthly rate, the previous value was 0.2% and the forecast is 0.3%. As for the annual rate, the previous value was 2.4% and the forecast is the same. Regarding the core values, which exclude food and energy, the core monthly rate was 0.3% previously, expected to dip slightly to 0.2%. The annual rate is expected to match the previous 2.5%. So we'll track this data together at 8:30. If the inflation data released tonight, for example, the core annual CPI, stays around 2.5, 2.4, or 2.3%, then overall, inflation isn't a major concern for now. But looking ahead to March, honestly, we need to be careful. So regarding tonight's data, I think even if it meets expectations or matches previous figures, the market will likely view it as neutral. There's not much concern about inflation before March. But after March, it all depends on the geopolitical risks between the US and Iran and how that situation evolves. Inflation levels hinge on oil prices. The higher they go, the lower the chance the Fed will cut interest rates. CPI numbers would surge even higher. That would obviously put more pressure on the stock market. It's like a seesaw effect. All right, now moving on from the economic data, let me answer a question. I'm not sure if the student from yesterday is online, the one asking about HAO. It's a long name, so I'll just use the first three letters, HAO. Not sure if it's pronounced how or something else. Oh, he asked about a defense stock, KTOS, known in Chinese as Kratos. Is this company a good buy? Briefly, they provide drones and target drones to the US military and allies. Their products include rockets, hypersonic test platforms, radar communications, satellite ground systems, and so on. Various defense-related training and simulation solutions. Now, as the conflict between the US and Iran continues, defense stocks are naturally the companies that stand to benefit. But there's good and bad. Some companies might be sluggish, while others' fundamentals are relatively mixed. Now, let's take a quick look at Kratos. At least technically, it's still maintaining an upward trend line. So if you really want to look into these so-called defense concept stocks, taking KTOS as an example, you should follow this upward trend line. As long as this blue trend line isn't broken, when it hits this moving average or the trend line, you can buy on the dips. But if it breaks below, just close your eyes and get out for a while. After all, these defense stocks are more directly linked to the news cycle. When the US-Iran situation gets tense and turns into a war of attrition, these defense stocks like KTOS, Raytheon, or LNT, Martin Luther, and so on. Wait, no, not Martin Luther. That's LNT. I'm using the English ticker. Martin Luther is a different theologian. My mistake. I suddenly forgot, as you get older, sometimes you even forget the Chinese names. If anyone remembers what that company is called, I've blanked on the name. If you remember, you can write it in the comments. Anyway, for these defense stocks, just watch the news noise as it will affect their price fluctuations. It's the same for KTOS. If you're trading it, just follow this trend line, and you shouldn't have any major issues. As for the officials' remarks, hey, good evening Naya and Banana, and good evening to May Daisy as well. Alright, while we're given updates, besides these international geopolitical risks, we've also been talking about the financial cockroaches and fund companies this week, whether it's NFAs, BlackRock, or Blackstone. Lockheed Martin. Right, Lockheed. Thank you. Thanks, Win. What's the name? Wyndon Means? Lockheed Martin. Lockheed. Why was I thinking of Martin Luther? I'm just too busy. So busy, I've started talking about religion. Speaking of Martin Luther, I'll tell you his story when I have time. He was the theological, a reformer. I'll tell you later. Anyway, about this fund management company. This company that came up today with some concerns is called Cliffwater. You could call it Water of the Cliff. Cliffwater has a private credit fund with a scale of about $33 billion. Currently, this credit fund is facing 7% redemptions. 7% is actually quite high. Usually, for credit fund companies like BlackRock or Blackstone, they usually set a 5% limit. That means if 5% of the fund's value needs to be redeemed immediately in a single day or short period, they'll impose a restrictive cap. In other words, for anything over 5%, they can ask investors to temporarily halt redemptions. Below 5%, they can give you the cash first. But above 5%, because they have to process redemptions and adjust asset allocations, they can't immediately return all the money investors want. So generally, these fund companies set a 5% benchmark. So if it suddenly exceeds 5% in a short period, these fund companies can't pay it back immediately. This also creates market concerns about why so many investors suddenly want to redeem these funds all at once, leading to some doubts. For instance, Cliffwater saw a 7% redemption this time. Last week, BlackRock's credit fund, with a significant $26 billion scale, faced a 9.3% redemption. Blackstone's flagship private credit fund also had nearly 8% of its capital redeemed. All in all, these amounts, to be honest, looking at the overall credit fund market size of about $1.8 trillion, it's really not that large, honestly. But when you hear reports from here and there, with redemptions happening in one place after another, when the numbers add up, people start to worry. They wonder why everyone is redeeming all at once. Are there issues with the private companies these funds invested in? Are some companies unable to pay back the money? Why are investors so nervous that everyone wants to pull out? So looking closely, although the market's focus is currently on credit and geopolitical risks, we still need to watch these recurring credit cockroaches popping up everywhere. While it hasn't caused a major storm yet, honestly, not a huge one compared to that 1.8 trillion. In terms of total scale, these combined might only be a few billion or maybe up to $10 billion, which isn't much, but we should be a bit cautious and keep an eye on it. If this keeps happening as geopolitical risks cool down, the market will shift its focus to what I mentioned, Cliffwater. BlackRock, Blackstone's flagship, and even NFS from a while back, people will start focusing there, so we need to watch closely. Okay, good evening Michelin, and hello Way, WEI, thank you. Lockheed Martin, that's right, the Protestant Martin Luther. Yes, hello Zhang, hello, hello, okay. Okay, HAO, you're welcome, I just answered your related question. If private credit leverage is too high and they refuse redemption, is there no way out? Well, in principle, no, because it'll be in the terms. It'll say, okay, below 5%, I can redeem immediately, but above that, I can limit your redemption or delay repayment. Those restrictive clauses are very clear. It's just that in a short period, you can't just hold on to a customer's money indefinitely when they ask for it. There's always a redemption clause in period. Within that 5% limit, they can pay you back right away, but beyond that, the contract likely imposes some restrictions. All right, that's my reminder regarding those credit cockroaches. Now, the 10-year Treasury yield hasn't changed much, staying around 4.15% with a terminal rate of 3.25. Rate cuts are still expected, about 1.5 to 1.7 times. Anyway, the market is focused on the US and Iran. If the big players talk it out, oil prices drop. If not, the stock market might slide again. So don't be too swayed by the international markets. The US market might go up one day and down the next, with lots of volatility. The Taiwan stock market is the same. Look at yesterday, right? The day before yesterday, it dropped nearly 1,500 points. Then yesterday it rebounded. It was up 1,000 points intraday, but then it opened high and closed low, pulling back. So yesterday it only rebounded 600 points. Then today it suddenly surged again, up another 1,300 points. So in the midst of all this volatility, how should you adjust? I'd still suggest that regarding position control, try to wait until the geopolitical risks have completely settled down. There are still many uncertain factors causing interference. When you face a 1,000-point surge one day and a 1,500-point plunge the next, I'd suggest that if you're an aggressive investor, try to wait for a sharp drop or a major crash before trying to catch a rebound or buying the dip. If there's no major crash or sharp drop, don't make a move. Like today, the Taiwan stock market rose 1,300 points, so don't chase it. Don't chase it. Just wait until tomorrow or the day after. If it really pulls back again, and as long as the supports, moving averages, and key levels aren't broken, then you can slowly start buying in batches, buying the dip in stages. Buying in batches is safer. Don't go all in at once just because it dropped 1,500 points yesterday. If you went all in and it rose 1,500 points today, you'd be in the green. But could it drop another 1,500 points the next day? It's possible. I'd suggest that when there's a big drop, take action in batches. That applies to US, Japanese, and Hong Kong stocks. They're all the same. If you see a major crash, doing it in batches is much safer. The US dollar index rose slightly today, up 0.05%. Safe haven demand also increased a bit. It bounced nearly 2,500 points in 2 days. I can't remember if it was 2,585 or 2,485, but anyway. Yeah, it's like I told that person, if you're trading futures, if you get both directions wrong, you'll get slapped on both sides immediately. Okay, good evening to the big mouth market. Now, moving on to geopolitical risks, who is it that is still fuming and doesn't want to step down? Iran. Why do I say that? Because Trump actually said today he offered a tiny olive branch, but it wasn't very obvious, more like a hint. He said he wouldn't rule out negotiating with Iran under certain conditions, bringing up this conditional theory. He'd also demand that Iran clear the mines in the Strait of Hormuz, or they'd face serious military consequences, and so on. Then he suggested asking Israel not to bomb Iran's crude oil and energy facilities. Why? Because if you keep bombing them and oil prices surge again, no one can handle it. No country in the international community could take it. Additionally, regarding Israel, their foreign minister, Saar, also said that they aren't looking for an endless, non-stop war against Iran. He said they'll coordinate with the US at the right time to determine under what circumstances the military action against Iran can end. In other words, both the US and Israel want a quick resolution. They don't want a long, drawn-out, scorched earth war. This is a clear and definite direction. After all, for Israel, they still have the Hamas situation and various lingering issues to deal with, and now you're going to attack Iran? Well, attacking Iran, if you go through with it, you'll need troops, money, and weapons. Is there support from international allies? Right now, it doesn't seem like there's any particularly strong support. Some offer verbal support, maybe just lip service, like France, the UK, or Canada might say, okay, my base. Lending bases for the US military to transport or launch weapons, resources like that, but they haven't been blatant about it. Aside from the US and Israel, no one has openly handed over weapons to Israel or the US and then sent in large numbers of troops to invade Iran together. No. So it basically means that in this conflict with Iran, the US and Israel are the main players. Other countries are just on the sidelines making noise, just shouting, Just shouting. So it looks like Trump, because Trump also has the midterm elections at the end of this year, the elections in November, so I believe he wouldn't dare fight for too long. If it turns into a scorched earth war, he really wouldn't need to run this year. So we can see that both Trump and Israel have already put forward the demand for a quick resolution. That's right. But today, Iran's foreign minister said, the Iranian foreign minister said their new leader, what's the new leader's name? What's it? Mojtaba, okay, sometimes I can't quite remember his name because he just took office. Mojtaba is Khamenei's son. He said the new leader, will not, he said he won't negotiate with the US. But he emphasized they'll fight as long as it takes. He doesn't care. However, the vice president said they haven't given up on negotiations, so there are hardliners and moderates. They've also started laying sea mines in the strait, about several dozen of them. Then the Iranian foreign minister said that regarding the Strait of Hormuz, they're only implementing transit-related controls, not a closure. Because Trump has been saying, don't close it. If you close the Strait of Hormuz, I'll use military force to take the strait back. Right. But he said directly, we haven't closed it. We're just controlling it. So it's really just the same thing with a different name. If you implement controls, tankers from many countries won't dare to pass through. Even if it's not closed, they're saying, sure, you can pass, but if a missile hits you, that's not our problem, since we're just implementing controls. If you're not an Iranian ship, not a Chinese ship, not an ally ship, and you pass through and a missile accidentally hits you, we're not responsible, because we're implementing controls. If you still come during controls, that's your problem. So we haven't closed it, we're just controlling it. Now, regarding crude oil in the Strait of Hormuz, if you look at the geography, you'll see the Strait of Hormuz has a curve, like an S shape, or a U shape, an inverted U shape. Above the Strait of Hormuz is mostly Iran. And to the left is the Persian Gulf. From the Persian Gulf through the Strait of Hormuz, it leads to the Gulf of Oman and then out to the Arabian Sea. Throughout this process, Iran occupies a very important choke point, a key location. So many Middle Eastern countries like Iraq, Kuwait, Saudi Arabia, and the UAE, their crude oil must pass from the Persian Gulf through the Strait of Hormuz, then out to the Gulf of Oman to be exported worldwide. During this process, it must first pass through this vital gateway. And for this gateway, just keep one number in mind. Through this gateway, from Saudi Arabia and the Persian Gulf region, about 20% of the world's crude oil passes through there. Nearly 1/5. 20% is right there. So if that 20% can't get through now, can't get through. So to put it simply, let's do a quick calculation. Let's look at OPEC. Within OPEC, you have the major member states. Now, countries like Saudi Arabia, the UAE, Kuwait, and Iraq are currently facing this issue. Since ships can't, they just can't transport the oil out. They have to cut production. Otherwise, if you produce all that oil and can't ship it, you're stuck with it in your own country, and there just isn't enough storage capacity. So you're forced to cut production. They say these countries have caught a total of 6.7 million barrels of crude oil, which is about 23% of OPEC's total and roughly 6% globally. Since the current global crude supply is around 110 million barrels, 6% of that is 6.7 million barrels being cut. They're taking action to reduce output. As for the IEA, the International Energy Agency, saying they'll release 182 million barrels of crude reserves, we'll see. If they do, it would certainly ease the pressure of these sky-high oil prices a bit. But in short, if oil prices keep climbing higher and higher, Tifa, good evening, Tifa, if crude prices keep rising, the chance of a ceasefire actually goes up because no one can handle these oil prices. When it hits $120 or $130, every country suffers. You can't just stop using oil or plastic or petrochemicals. So many things and energy needs rely on this oil, even though current energy demand honestly isn't like the 1973 oil crisis situation. We have many alternatives now, like natural gas, solar power, and other related... why is there a mosquito flying around here? No wonder my ears suddenly felt itchy. I think I just saw it fly past. It's here for the lesson, too. Even the mosquitoes are listening. It's a real zoo today. First cockroaches, then lobsters, and now mosquitoes. Anyway, if oil prices keep rising, the whole world will suffer, which I think increases the likelihood of a ceasefire. That's the idea. Okay, good evening, number 0. The US and Iran are at odds, and now Iran won't let them through. Yeah, that's basically the gist of it. The point is, if Trump wants to withdraw troops, he needs a justification. He has to find some reasons or specific points to show he's actually achieved some results before he can pull out. Otherwise, he'd lose face. What kind of results? For example, if he says he's secured their enriched uranium, or perhaps he's gained shipping rights in the Strait of Hormuz, or maybe he's neutralized the Iranian Navy and Air Force so that no more missiles will be fired into the Strait of Hormuz. In a situation like that, I think he would then claim that we've made significant and effective progress in the conflict with Iran. That's the only way he can justify a withdrawal. Otherwise, if he has nothing to show for it while the Iranian leaders are calling for peace talks, he'd look weak. That's the idea. So as for how long this will drag on, I think we need to wait and see. Honestly, we just have to keep watching. In other words, good evening, Lewis. Don't let one day's ups and downs make you think the market has settled. Not at all. I think there are still many variables at play. Okay, thanks for the like, number 0. Right now, there's still a lot of variables, you know? I think we'll have to wait until Iran shows some new highlights. Like if they're willing to talk, or if their foreign minister comes out and says something, then we can take another look. I think the changes will be more direct then. But for now, it looks like Israel and Trump don't want a long war. But Iran is basically saying, fine, no problem. I'll fight you for as long as it takes. I'm not afraid of you. With oil prices this high, whoever can't take it will be the one to suffer. Unless you completely withdraw your troops, pull out, and stop attacking Iran for good, then we can talk. That's how things are progressing right now. Okay, good evening, Wang Jichong. Good evening, Wang Jichong. All right, thank you. And good evening to Sandra Chen as well. Good evening, Louis Yang. Good evening, good evening. Okay, and oh, right, just a reminder for everyone, today is Wednesday. Next Monday, I think. Next Monday, I'll be giving a lecture at the Goldman Sachs branch in Kaohsiung. I'll be talking about U.S. stock sub-brokerage and various international affairs, including the Magnificent Seven, the Big Eight, whatever giants there are. Anyway, I'll be sharing some insights on U.S. stocks. If you're interested in U.S. stocks or want to dive deeper into international events, you can contact our Kaohsiung branch to inquire about signing up. I believe the lecture is in the afternoon, next Monday, March 16th, in Kaohsiung. So I'll be heading down to Kaohsiung. Actually, a lot of our instructors don't like going to Kaohsiung, you know? The barefoot don't fear those with shoes. Exactly. But why don't they like going to Kaohsiung? Because many of our instructors feel that a same-day round trip is exhausting. It's a 2-hour high-speed rail ride there, 2 hours back, and about an hour for the lecture in between. So the whole day is spent traveling back and forth, which they find very tiring. But actually, I quite enjoy lecturing in Kaohsiung because I like speaking in central and southern Taiwan because since I'm from Kaohsiung, I'm a Kaohsiung kid. I'm a local. So every time I go back to Kaohsiung, it doesn't feel like a business trip. It feels more like I'm going back home to visit family. So the mindset is different. Plus, every time I'm in Kaohsiung after my lecture, I'll visit some nearby spots, look around, and enjoy the local food. Only then do I head back to Taipei. So my situation is different from other instructors. That's why I tend to do more sessions in Kaohsiung. As for New York crude oil prices, they rose 2.25% today. Again, geopolitical risks surrounding Iranian oil are driving the price fluctuations. Good evening, Amy Lynn. Good evening. All right, and regarding economic data, around 8:30 tonight, I'll be walking you through the latest CPI figures. Then tomorrow and the day after, we'll have US initial jobless claims and very importantly, the PCE, durable goods orders, and personal spending data, which will be released on Friday, March 13th. When those are out, we'll track them together. Okay, good evening, Zhao Yao Yu. Good evening. The current issue isn't just about the war. Yes, exactly. There are major concerns regarding credit. Yes, indeed. You can see that large bank stocks have been falling lately, and the bank stock index is performing poorly right now. It's not looking good. Plus, with the previous reasons for the US pulling back AI funding and oil prices causing inflation that directly impacts rate cut expectations, blah, blah, blah. Whether past rules still apply is a very good point. Yes, exactly. This actually ties back to what I mentioned earlier at the start of the session, right before the lecture. There's more than just one credit cockroach now. Yeah, more than one. MFS, BlackRock, Blackstone, and today, Clifford Water have all seen a wave of redemptions in their credit funds, and the redemption amounts are nearing 8 to 10%. So, regarding this situation, I think it'll be a major concern in the future, a pretty big concern. When everyone's watching the market in the second quarter, you should also pay extra close attention and keep an eye on it. All right, thanks. Thank you, Zhao Yao Yu. If you get a chance, come to Kaohsiung. If there's an opportunity in Kaohsiung, we can all chat, just hang out and talk. Like sometimes when I'm giving speeches at various branches, I'll also run into some students, online clients who'll come to the, the branch office to chat with each other. That happens too. It's quite interesting seeing someone online and then meeting in person. Everyone talks about the market. Good evening, Shushu. When talking about the market, to be honest, we won't always be 100% correct. That's for sure. 100%. Even Buffett isn't 100% correct, but we just need to know how to at least catch 80 or 90% of the industry trends or figure out which sectors are mainstream now or whether the current index is leaning bullish or bearish. You should be able to read it 80 or 90% of the time. Now, of course, there are times when we might be wrong 10 or 20% of the time. It's inevitable. But when we're wrong, we try our best to, set a stop loss or make adjustments and then slowly do some what we call rebalancing, adjusting the positions. Everyone's the same. You and I, we're all just ordinary people. So it's inevitable to have times when we misread or make mistakes. I think that's fine. It's totally fine. We just adjust things and then start over. Anyway, as long as you're in this market for a day and haven't left, it's hard to say who wins or loses in the end. Maybe you say you lost money all last year. You say, teacher, last year and the year before, US and Taiwan stocks were in a big bull market, rising 25%, but I only made 2.5%. What should you do? It doesn't matter. Maybe this year the market is bad, but you'll actually make money instead. So I think this stuff is unpredictable. It's all unpredictable. All right, moving on. Let's talk about Oracle. All right, Oracle. Okay, Xiaomao LV said the big 8 seem more stable. Of course, in this speech, I'll also mention the 7+1 giants. Maybe the other giant is Broadcom, or maybe it'll be TSMC. Anyway, I'll look at the relevant materials later and add more for everyone. Well, I didn't really have time to prepare during the speech. I might spend some time at home this Saturday and Sunday to prepare, otherwise I really won't have time. All right, as for Oracle, looking at the earnings report, the fourth quarter revenue is pretty good, exceeding expectations with 22% year-over-year growth, and like the cloud infrastructure, 84% year-over-year growth. That's all good. Overall cloud, including infrastructure and SaaS, the SaaS software, and other software services, $8.9 billion, 44% year-over-year growth, all very good. Remaining performance obligations are over $550 billion that haven't been processed yet. These orders were taken, but you haven't finished delivering them yet. Now, this amount is a bit less than expected. The expectation was nearly $560 billion. Now, performance obligations are $553 billion. That's actually not bad, still very high. Over $500 billion in obligations not yet fulfilled. So saying it's a bit off is fine. Estimated first quarter revenue is up nearly 20% year over year. EPS is 1.92 to 1.96, all above expectations. They also revised 2026 revenue up to billion dollars, maintaining this year's $50 billion capital expenditure. It all looks pretty good, right? Whether it's revenue or the future outlook, the performance is good. Good evening, Keiko. Everything's performing well. So logically, Oracle should soar today. Yes, it did indeed have a 10% pre-market gain in the US stock market. A 10% increase is pretty good, right? But I think everyone should focus on more than just the strong revenue outlook, which eased market concerns a bit. I believe the most important thing is really the FCF, which is what we call free cash flow. So what did he say? He said that besides the good revenue outlook, he mentioned, now, because of AI tools, companies can build more software with less manpower. What does that mean? It means AI will gradually replace people, which implies Oracle might have layoffs soon. Oracle might have layoffs soon, so keep that in mind. Since he said they can build more software with less labor, layoffs are inevitable in the future. Of course, layoffs help reduce company costs, so stock prices tend to rise, or at least they can easily go up. But he hasn't mentioned layoffs yet. He talked about the so-called doom of SaaS, the end for software companies hit by AI replacing software. This doomsday scenario might affect smaller or single product players, but it won't impact Oracle much. Oracle has so many different software products and functions, and its scale is massive. So it hasn't been affected by these AI tools. Also, he mentioned that the profit margins for leasing NVIDIA chips are lower than traditional software licensing. Simply put, he thinks the profit from chips in partnership with NVIDIA, like AI data centers and chip leasing, isn't as high as the profit from just leasing software. That's the general idea. Over the past 12 months, though, can they afford not to do it? No, they can't, because NVIDIA is still the top leader in AI. If you don't work with AI, if you don't work with NVIDIA, who are you going to work with? AMD? AMD is just a small player with less than 5 or 10% market share, while NVIDIA has 90%. You have to work with the big brother. So even though working with the big brother means lower margins, do you still do it? You have to. Nowadays, anyone working with NVIDIA, like OpenAI and other companies, even Google and TSMC, they all become part of this interconnected AI perpetual motion machine. So these big companies have to collaborate and buy their chips, because right now, NVIDIA chips have a near 90% monopoly on the market. Lastly, he mentioned that for the past 12 months, the FCF, the free cash flow, is still negative. How much? Negative $13.2 billion. It's increasing, it's getting higher. He said they plan to raise $45 to $50 billion this year to expand cloud infrastructure. That means more burning cash, more borrowing, and more expansion. But the free cash flow is negative nearly $13.2 billion. From negative $6 billion 2 quarters ago, to negative $10 billion last quarter, to negative $13.2 billion announced this quarter, it's just going up. So I can only say that while the revenue and outlook were good in this report, leading to a strong pre-market rally in US stocks today of nearly 10%, is it stable for the future? Can today's jump really be a turning point that pulls Oracle up into that AI perpetual motion machine? I don't think so. I think Oracle needs more time to settle, and the market needs time to clear up concerns about whether the impact of that negative free cash flow can be narrowed down. If it goes from 6 billion, 10 billion to this time 132 billion this quarter, and if it hits 150 billion next quarter, then when exactly will the money come back? When will the money be earned back? That's a very, very big question. What everyone's worried about is this kind of thing. People are worried about why your free cash flow is always negative. Can't it be narrowed down? Can't you make money to make up for it? If you can't, will you borrow more and it'll snowball? And finally, you can't fill this hole, and then your free cash flow, your revenue, profit, and everything will result in concerns about a cash flow crunch. That's what everyone's worried about. But in the short term, today at least, there could be a significant rebound. But let's look at the technical side. For Oracle right now, the monthly and quarterly moving averages are still showing a downward trend. The monthly and quarterly averages are currently in a more bearish alignment. So today's rebound, a 10% rebound today, might just happen, hit this green line here, the place I've circled, Today's 10% rebound should just hit this downward resistance right at the quarterly moving average. So if it hits it, don't go chasing it, because usually in technical patterns, after hitting it, it'll easily pull back. You have to respect the trend. Wait for the 20 or 50-day moving averages, the monthly and quarterly averages, to slowly level off after falling and settle. I think that's when it'll be safer to start building a position slowly. Otherwise, to put it nicely, today is more of an oversold bounce. Today is more likely to be just a simple oversold bounce. Okay, is the CPI out? Yes, it's 8:30. Let's look at the CPI data. Oracle needs to turn technology into profit, which seems feasible. Just let it convert. Only by turning it into a profit-making perpetual motion machine can it work. Otherwise, you can't make money because the chips they buy from NVIDIA are so expensive. That's why he said the profit margin for buying chips from NVIDIA is so low. Why? Because NVIDIA's chips are expensive, but you still have to buy and work with them. If you do, your profit margin drops. Why? Because the cost is just too high. Okay, let's look at the economic data. The data just released at 8:30. I said today's February data wouldn't have much impact, so don't worry too much. It's March we need to be careful about. And we just saw the February CPI month-over-month rate was 0.3%, which met expectations. It's not bad. Compared to last month's 0.2%, it's only a tiny bit higher by 0.1. So the monthly rate is 0.3%, and the year-over-year CPI rate came in at 2.4%, meeting expectations and the same as the previous value, so not much impact. Inflation isn't out of control, it didn't spike, February isn't out of control. February isn't out of control, but we don't know about March. Whether March will be out of control or spike depends on the situation with the US-Iran conflict. The core CPI monthly rate was 0.2%, also meeting expectations. The core CPI annual rate was 2.5%, meeting expectations and the same as the previous value. So honestly, there's no need to overanalyze today's CPI data because it's within the range of market expectations, meaning inflation isn't out of control. But looking ahead a month, the situation will be different. So we can only interpret it this way. Tonight's CPI monthly and annual rates show that inflation was not out of control through the end of February and met expectations. Inflation didn't spike, which will also help the Fed decide what to do. To cut interest rates, but this is only limited to February for now, and March is still unknown. So we can only say that today's data will be relatively positive for the US stock market. This data can be interpreted as being more favorable for the US stock market because inflation didn't spike. Since inflation didn't spike, there's naturally more hope for the Fed to cut rates. That's the general interpretation. So in the short term, tonight, this data will be more neutral to positive, but as for how long the positive effect will last, I don't think it'll be very long. It'll probably just be reflected when the market opens today. That's about it. So that's a little bit more on the CPI part. Now, moving on. I'll add some info on the financial reports and development trends of two companies. Applied Materials, ticker symbol AMAT. Applied Materials said it's collaborating with Micron and South Korea's SK Hynix to jointly develop next-generation chips, which are crucial for things like AI, high-performance computing, or HPC. It didn't go into detail about which specific chips they're collaborating on, but since you're collaborating with Micron and Hynix, it must be related to memory. For example, memory chips related to HBM3 and HBM4 are being developed in collaboration with Applied Materials. So in a way, Applied Materials has jumped on the so-called memory craze. Because we've seen Micron, SanDisk, WDC, Western Digital, and even Samsung Electronics and SK Hynix all skyrocketing. It's all because of this wave of memory shortages. So if Applied Materials is collaborating with Micron and Hynix today, it's also benefiting from the memory boom to some extent. And if it can catch that wave, it'll naturally provide some support for its stock price. So Applied Materials rose yesterday by 2.05%. And for many companies, just look at this line in the short term, this green quarterly moving average. As long as it doesn't fall below the quarterly line, there's no need for much concern. It's holding for now. The quarterly average, the 50-day moving average, you can see the price on the screen to get an idea. So there's still a chance as long as it doesn't break the quarterly average. But if it does, remember to get out. If it breaks the quarterly average, remember to sell at least some of it first. If it breaks, get out. Currently, many companies haven't broken it, including the Magnificent 7 or 8 or whatever. They haven't broken it yet, and the indices are basically still holding. Some are holding at the quarterly average, while some weaker ones are holding above the 200-day yearly line. So even at their worst, the yearly line is still holding. The better ones might be holding at the monthly or quarterly lines. Just keep this concept in mind. As long as the moving averages hold, there's no big concern. That's Applied Materials. Now about TSMC. A student asked about TSMC yesterday. Its revenue and financial reports are still performing well. As the guardian mountain of the nation, it's naturally remarkable. Its February revenue was announced at nearly 320 billion new Taiwan dollars, down 21% month-on-month, but up 22% year-on-year. This marks the strongest February performance ever, a record high, very impressive. February was the best it's ever been for that month. Although the 21% monthly decline is normal since January was so strong, generally, February revenue is lower because of the Lunar New Year and its impact on working days, things like machine maintenance, standby time, people taking time off, and so on. So a month-on-month decrease in February revenue compared to the previous month is normal, perfectly normal. So don't look at that 21% drop and worry. It's a normal situation. Usually we look at the year-on-year growth rate, comparing this year to the same period last year, which is more accurate. So a 22% year-on-year increase. Not bad. The earnings call mentioned that first quarter revenue could be between $34.6 and $35.8 billion. Anyway, the performance is still quite good. As for TSMC, our national treasure, looking at the technical side, it's currently holding above the 50-day moving average in the short term. So if it holds the 50-day average, there's not much concern. But what if it breaks below? If it breaks, there's still this blue moving average below, this blue trend line that's been running across. If this blue trend line isn't broken either, it's no big deal. It won't turn bearish. At most, it's just a correction after a big rally. Of course, for TSMC to perform better and even Applied Materials, if they are to be more stable, this green line, the quarterly moving average, must hold. You can also take a quick look at the stocks you're holding. If your stocks have broken below their quarterly averages, you should be a bit cautious. That means you should try to reduce your position on any rebounds. If your stocks are above the quarterly or even monthly averages, they might be stronger stocks. For the weaker ones that have pulled back to the 200-day yearly average, you'll need to watch them closely. Because when the overall market is down, they might have reached the 200-day average early, so you have to see if they can hold. If not, breaking the yearly average usually intensifies the pressure. Breaking that line really ramps up the pressure. So for any stock, just keep an eye on these few lines. The 50-day and 200-day averages are enough. Alright, finally, I'd like to add something. Just a quick lighted topic called OpenClaw. We call this OpenClaw thing the lobster. Why is it called the lobster? Because its logo is this thing in the bottom right corner. It's a red lobster icon, so we just call the software the lobster. So why is this software so hot lately? People in mainland China and elsewhere are constantly installing it. Because this software, you know why it's so powerful? Once you install it, it integrates with your PC, and you give it execution rights, ownership, and permissions. Then, what does it do for you? It helps you use various online communication tools and large language models, maybe through ChatGPT, Anthropic, Claude, and so on. Lots of different things. And then it autonomously handles file management, emails, and data processing for you. It's like having a real person as your secretary, your own private secretary. Sounds great, right? An AI as your private secretary? It can book flights, build websites, and someone once mentioned asking this lobster to create a professional travel website. For a travel site, you need pages, the site itself, and payment integration. You have to set up third-party payments and cash flows. It finished it in just about 20 minutes. 20 minutes is about a third of the time it takes a professional web developer. So a travel site in 20 minutes? Very impressive. Now, this thing has its advantages. It's basically the concept of an AI agent. To put it simply, I hire an AI, I use an AI tool to tell an AI to use another AI. Let me say that again. I use AI to perform AI searches and do AI tasks. For instance, sometimes when people are, say, designing a website, writing copy, booking flights, or writing articles, they might not know how to write it or how to prompt the AI. They don't know how to talk to ChatGPT or Gemini. To have some conversations, to get what I want, I need to know how to ask questions. I might not know how, but it works through Claw because Claw is your AI assistant. Through Claw, you provide what it needs, give it the requirements, and then it helps you ask for those things. So it's like using AI to tell AI what to do. Okay, here's the catch. This sounds very useful, right? It is, but there's a major concern. There's a big concern about why everyone likes using it, yet many countries are worried. Because it's been found that we're giving execution permissions on our personal computers to this Claw to act as an agent, meaning it does these things on your behalf. Now, here's the problem. You grant it these permissions, you enable these execution functions, And it's been discovered that there are many, many OpenClaw plugins online that contain malware and pose potential risks. They could even steal your Steal your computer's security keys, your online banking keys, passwords, and leak all your privacy, even your journals and sensitive items. All your data could be leaked without you knowing. Why? Because you've already handed over ownership, execution rights, and all your computer permissions to it. Because if you don't, it can't perform actions for you. But once you do, that's where the trouble starts. Risks arise and data gets leaked. So if you use these claw-related software in the future, it's not that they aren't useful, it's just that you must be extremely careful with the permission settings. Whether it's this claw today or similar software in the future, I think they will eventually become very common. There will be many. So when you use these tools, remember, they're great, but you must choose wisely and know how to set up some preventative measures. Otherwise, it'll end up with all your data being leaked before you even get to use the tool properly. Your credit card info could be leaked, and you could face unauthorized charges. Now, this claw company is quite impressive. It's called OpenClaw, right? Their founder is, I think his name is Peter? Peter joined OpenAI in mid-February of this year. He was headhunted by Altman and joined OpenAI. So regarding its future, I think we might see similar AI agent tools appearing within OpenAI and ChatGPT later on. It's just that everyone needs to be mindful of the risks when using them. Be careful of the risks. Okay, it's about the trust issue with AI stewards. Just like Lynn Homa said, if the software isn't used correctly, you might get hijacked. Good evening, everyone. Good evening. Now, Anna mentioned that because of potential trust issues, she might not dare to use it. Right. Actually, I don't dare to use this kind of thing right now either, because you don't know how big the risk is. Even though it's very useful, I still think it's better to have humans review data and do the filtering. Keeping some control and ownership with ourselves feels safer. At this early stage of AI development, I don't quite dare to completely hand over execution and permissions to Claw for operations. Okay, Oracle's pre-market performance in the US stock market, as we just mentioned, shows a pretty good outlook in their earnings report. But there are still some concerns regarding their free cash flow, so everyone should be a bit cautious. Although it surged 10% in pre-market trading, Nvidia rose 3%, and others like Nike, Estee Lauder, Amazon, and Occidental Petroleum also went up by 1 to 2%. Honestly, among today's gainers, besides Oracle being a highlight, there weren't really any other major tech stocks. Among the decliners, Diamondback Energy fell 3%, while Cintas, FedEx, and HP also dropped by about 1.5%. The decliners aren't too bad, and there aren't any major tech stocks like Nvidia, TSMC, or Microsoft seeing significant drops. So today looks like it'll mostly be a volatile session with minor gains and losses. As for the Dow Jones, it fell 0.07% yesterday. Similarly, we can view the 200-day moving average as short-term support. If it holds, there shouldn't be much of an issue. It's just that the current monthly and quarterly moving averages are leaning towards a correction after recent gains. During this correction, we have a ceiling, which is the resistance from those averages, and a floor at the 200-day average. So, in the short term, you'll just have to trade within the range between the annual and quarterly lines. The Philadelphia Semiconductor Index rose 0.7 yesterday. Fortunately, it managed to climb back above the upward trend line we discussed, but I don't think the strength of that move is stable enough yet, so it's best to wait patiently for it to stabilize. If it truly steadies or even gets back above the quarterly moving average, I think that would be quite beneficial for semiconductor companies. For now, it's a bit of a wait-and-see situation. As for the Magnificent Seven, they're staying above the 200-day moving average and the trend line, so they're holding up okay. Once this period of volatility settles, looking ahead to the second quarter, it's the same story. As long as geopolitical risks don't escalate into a full-blown conflict between the US and Iran, and oil prices actually start to come down. Also, as we mentioned at the start of the show, good evening, KHORL. I mentioned earlier those financial cockroaches in the credit market. If they stop popping up everywhere, then in the second quarter, we could see the index undergo a reasonable correction after its gains. Combined with geopolitical risks cooling down and both sides extending olive branches, if no more credit issues arise, I believe there's still a positive market outlook to look forward to in the second quarter. But on the flip side, if those two negative factors I mentioned, geopolitical risks turning into a scorched earth conflict and credit issues appearing one after another, like a whole swarm of cockroaches coming out of the woodwork, then everyone will need to be a bit more cautious about the market in the second quarter. Alright, that's all for tonight's Capital Good Night. We're here to give you the latest news before the US market opens. Before you go, remember to like, subscribe, and share. Finally, I wish you all successful trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.